Well, I'm focused. I think that there's one good thing. I believe in clean money. I believe in digital capital. I believe that there's $450 trillion of wealth tied up in physical and financial capital assets that are defective. I believe, and I said this in Nashville a few weeks ago. I said that 450 trillion is bleeding off 3 or 4% of its economic energy each year. That means it's a $10 trillion inefficiency in the economy.
In this recent interview on Block Trainer with Michael Saylor, we explore the significance of cryptocurrency through Saylor's perspective on its future trajectory and the political power surrounding this digital asset. He passionately argues that Bitcoin is not just a digital currency but a revolutionary technology with the potential to reshape the global financial landscape. At the time of this discussion, Bitcoin was trading around $59,000, with a 1% decrease in the last 24 hours and a 5% increase over the past 7 days. With 19 million coins in circulation out of a total supply of 21 million, Saylor highlights its scarcity and value proposition, emphasizing that Bitcoin's unique properties make it a superior store of value compared to traditional fiat currencies.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
There is a friction, right? There's a loss of energy through that vibration. And then the frequency is referring to the rate of vibration and the time and the duration over which you hold that asset, that material. What are you holding it for 100 years? Are you holding it for 100 milliseconds? And once you start to think that way, well, then a lot of things become very clear, right? There are some capital assets you can't hold very long. There are some, and there are the rate at which you dissipate economic energy is a function of the frequency with which you're vibrating, and then also the entity doing the vibration and the nexus, right? A church can move money through 100 different assets back and forth tax-free. A university can hold the same property for 1,000 years tax-free. Your family can't, you see? And so when you start to understand the solution to the problem is different for an individual versus a trust company versus an operating company versus a sovereign entity, depending upon what nation you're in, what city you're in, what neighborhood you're in, and whether or not the capital is oscillating in the physical domain, the financial domain, or the digital domain. And of course, you're not going to get that speech out of Charlie Munger or Warren Buffett or any economist, right? Their world is very, very constrained based upon what they learned, and they engage in lots of discussions of faux metrics, which are meaningless in their constrained synthetic world. And as long as their world consists of other people that live in the same world, then they have these synthetic, faux conversations that don't at all relate to the greater universe, but they just can't see the greater universe because they've just grown up in this very synthetic, idealistic, theoretical world that that's all they could imagine. Because just like doctors didn't understand germs till they had a microscope, until you have X-rays and microscopes, you think that that illness comes from demons and spirits, but because you imagine stuff, superstition, you need an explanation for why you're dying. So you have to imagine the God struck you with the evil spirits and a curse. And then when you actually can see the cells breaking down, now you're dying of something very, very precise. You know why you're dying. It's because you're drinking too much alcohol, or because someone cut you with a rusty blade and you're infected. And at that point, you're on a path toward a solution. And I think we're at this inflection point, moving from economics as art, colored by superstition and religion and ideology. And we're crossing this boundary where economics becomes science, and it's informed by mathematics and engineering, right? And the scientific method. But you have to date that, in my opinion, to January 3rd, 2009, when Satoshi unleashes Bitcoin, and there's a singularity, and all of a sudden there's actually engineering, physics, and mathematical principles that are starting to spread in a viral fashion through the economy. And it was like a nothing, and then it's $1 million fire, and then $1 billion network, and then a 10 billion, then 100 billion. Now it's a $1 trillion network, but still $1 trillion is 0.1% of the economy. So 0.1% of the economy has clean money, and 99.9% of the economy runs on dirty, toxic assets that are defective, that are operated by people that don't know they're trading defective assets. Because how would you know if you'd never seen clean? How do you know that you're dirty?
As we just heard Michael Saylor discuss the future of Bitcoin, let's delve into his views on the challenges facing traditional banks. Saylor highlights the pressure these institutions are facing due to the rise of digital currencies, arguing that cryptocurrencies address many inefficiencies and risks, such as inflation and the centralization of power. He believes that banks must acknowledge digital assets as legitimate and adapt their business models accordingly. Saylor emphasizes that the financial landscape is evolving rapidly, and institutions that fail to embrace this change risk becoming irrelevant. His insights challenge us to rethink our understanding of money and the role of banks in our lives. Now, let's hear more from Michael Saylor on Blocktrainer.
You can give YouTube, or you can give books to 1 billion people, and you can do it in 10 years, and it's a meaningful advance forward. Solving the problem of what books they should read, we might be debating that for 1,000 years. And so we come to Bitcoin. You can solve the problem of impaired capital, right? Let's come back to the elephant in the room. The capital markets are defective. The existing traditional finance capital markets, they operate something like 19% of the time, right? From 9:30 in the morning till 4 in the afternoon, Monday through Friday, you've basically got 32.5 hours, right? 32.5 hours out of 168 hours a week. The capital markets function in the United States. So they function that way, but they only function that way for about 10% of the people in the world, right? Maybe 800 million people have access to that capital market at best. So what you've really got is a 2% solution. You've got a tenth of the world, that's able to access the markets 20% of the time. How does someone in China access the US capital markets? How does someone in Asia or Africa? How does an Australian access the US capital markets during working hours in Australia? How does an American access the US capital markets on the weekend? Right? There is no capital. There is no, the money markets shut down. The capital markets shut down. There's no liquidity. There's no leverage. Also, all of the assets that circulate on those capital markets are, for the most part, currency derivatives. So under the best of circumstances, they're USD currency derivatives that are bleeding 7% of their economic energy a year. So what you have is capital markets available to 2% of the world. There are gatekeepers that, there are circuit breakers. Like, look what happened the other day where the Tokyo Stock Exchange, the futures ripped up, and they shut down the futures market and shut down the stock exchange, right? And look at the bond markets. The number one capital asset in the world is the US T-bill. It's not liquid and functioning 24/7, 365. So the only capital market that is 24/7, 365 that's functioning is Bitcoin. Right? Bitcoin is digital capital. It is open to the entire world. It is egalitarian. It is programmable. It's intelligent, right? And in that particular, and it's true, right? It is, and That makes it very volatile, but the volatility attracts market makers. And that's why someone will actually post $20 billion of collateral, and they'll give you $20 billion of liquidity on Sunday afternoon during the worst financial crisis of the year. On a day when everyone else is afraid to do anything, you can actually find billions and billions of dollars of credit or liquidity. If you actually needed to travel to Tokyo, and on Sunday afternoon, someone held a gun to your head and you needed to liquidate 25% of your assets for cash in an hour, you can do that with Bitcoin. You cannot do that with bonds, equity, real estate, gold, diamonds, fill in the blank. There's, you probably couldn't even do it with a lot of currencies, right? The banks are closed. So what you have here is you have a 20th century economy running on a crippled system with defective assets. And then you have a digital opportunity where you can actually run on a digital capital that is 100% available, where the capital has a useful life of 10,000 years, not 10 years. Right? Where the impedance to the transfer, is theoretically close to zero, other than, whatever taxable issues pop up depending upon your domicile. And that's the world that we're building right now. That's the opportunity. And so the reason I'm laser-like focused on Bitcoin is I think within 30 years, it's very reasonable, within 30 years from when Satoshi launched that network, you could actually introduce a $100 trillion digital capital market that takes us from a 2% solution to a 100% solution, that takes us from a 10, 20-year duration economic life expectancy to a 10,000-year economic life expectancy. So it's something that's achievable. It won't cure cancer. It won't get us to Mars. It won't solve, religious and political and social and ideological differences. Those things have to be solved by somebody else. And it's their life's work, and maybe they will, and maybe they won't. But I think as a technologist that the breakthroughs in civilization are fire, steel, electricity, petroleum, internal combustion engines, nuclear reactors, airplanes, railroads, right? Straightforward radio, right? Straightforward things, and then Bitcoin, digital capital. These are the breakthroughs. Each one of them came and it made the world a better place, but we still used it to fight wars, and we still use, Stalin used steel, and Stalin used electricity. And so you're going to have issues. When I say 50% of the problems are solved by Bitcoin, I mean that 50% of the problems can be solved by digital capital, but the other 50%, they're going to be the work of corporations and politicians and institutions and intellectuals for the next 1,000 years. And
Michael Saylor underscores the transformative potential of Bitcoin and its far-reaching implications for the financial industry. He challenges traditional banking systems, emphasizing the strategic importance of adopting Bitcoin for future success. We'd love to hear your thoughts on a few questions. What role do you think Bitcoin will play in the future of finance? How should banks adapt to this new technology to stay relevant? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.